Hi, welcome to the Market Alert for Friday, the 12th of June. And if you're new to the Market Alert, then welcome. Well, yesterday was an interesting day as the world seems to be burning around us like Rome at the moment. Yesterday we saw the markets pulling back, and also yesterday I mentioned in the implied volatility that we got an amber and of potential weakness in the market over the last few days. Well, yesterday it turned up. And as the headline says here, it's an effing rout. Reopen rally ruined, but bonds and bullion bid. Not necessarily true on this bit, as silver was moved to the downside, but gold moved to the upside. So the gold-silver ratio widening a bit there. And as it says here, and it's gone. Well, not necessarily. It's what's his face, Mnuchin. I think then Treasury Secretary is already talking about printing another $1 trillion to boost the economy, which means it's a euphemism for boosting the market. So the headlines for yesterday: another broken market. FX trading has been reduced to a leap of faith. That's because all currencies are being devalued against the US dollar. Well, all currencies are being devalued with the amount of money that's being printed. It's just that the dollar is the world reserve currency and the stronger of all of the global currencies. So that's what's going on there. Stupid and ridiculous. Rabobank says the Fed will cause everything to come crashing down in epic ruin. Absolutely. Wrote about this in 2011, 9 years ago. But the Fed are going to destroy the global economy with their money printing and the global debt that will be unserviceable. Stocks crash, hit by biggest sell program on record. Retail favourites implode. Well, of course they're going to, because they're a target for a lockdown where there's been no retail sales. So down 5% yesterday. Again, Michael Rourke, the market is broken today more than it was on March the 23rd. That was the day before we went into lockdown, and it's entirely due to the Fed. Absolutely. It's the Fed. That's the problem. They should have let the banks go bust in 2008, guaranteed everybody's money in. The government should have guaranteed, or the Treasury should have guaranteed everybody's money in the bank, and the bank should have gone bust. But no, they bailed them out with 800 billion. They were at 4 trillion just at the beginning of March, and now we're nearly heading to 7.5 trillion. And if the Munchkin gets his way, then there'll be another 1 trillion added to the pile. They're just buying everything. That's what they're doing. The most absurd moment in the history of capital markets. Hertz plans to sell up to 1 billion in new bankrupt stock. Just think about that for a moment. This is the insanity we have reached. You just can't. You really cannot make this crap up. You really can't. But this is where we're at. This is exactly where we're at. So yesterday, let's just have a look at the implied volatility whilst we're here. You can see this spiking up. As I mentioned yesterday, we've gone into the amber zone early on, and then you can see this spike. So the option sellers were certainly increasing the premiums, and this certainly paid off yesterday, as we see the stock market close below the 20 bar moving average as well, which we'll look in detail now. So let's start off with the German DAX. We'll do it a bit differently this morning. This is the daily chart, having traded up, and I think it was Tuesday's alert when I said there was potential weakness in this market. You can see prices being hammered down yesterday, straight through the 200 bar moving average and straight down to the 20 bar moving average. I've drawn in a fib retracement from this low to this high, and this gives us an area of support should prices turn around today. The 62% on the way up and the 62% on the way down. So we've got a bit of a major support here should prices break the 20 bar moving average there. So that's your bigger picture of what's going on. You can see that prices are attempting to reverse and move back to the upside, and this is not uncommon. Seen this many times over the last goodness knows how many years, where prices, if they get monkey hammered on the downside, they reverse and can move back to the upside. So in the 2-minute chart for yesterday, the market was already weakish before the open, and you can see there by the red bars prices moving lower until we get to the green bar with the usual retracement here. Let me just show you what I mean. From this low to this high, you see prices coming back to the 62 and 78%, and then you get the green bar there, and prices are moved up until we get the red potential weakness coming into the market. When you get red inside of a green bar, this is potential weakness and selling, and then prices are moved to the downside. And once again, we get this repeatable pattern from the low to here. You will see prices stop at 78. They will then move to the upside, 62 and 78 there. You'll then see them move to the upside here. This is the last high that is left behind because this one is lower. So from there to there, you'll see the market stop at 62% and then move lower. We then have a buying bar. We've got the buying coming in. And again, if we just move over to the left here to here, you will see prices finding support. And then trading sideways, we've got the double bottom here. We've got a triple top here. The market became stuck in a channel and then eventually broke out to the upside. We had two signals. The first one managed to only break even, and the second one was just a few points because of the range, or the narrowness of the range. And then prices moving higher, closing back above the 200 bar moving average, which is the black one, the black line there. And we then see prices from the high to the low come back to 62, with prices breaking the 200 bar moving average, and then off we go. This is in the pre-market session. So when we get to the Dow opening, the DAX takes a moment or two to actually move higher with the Dow, and then we had a sell signal which was a loser as prices came back. We had a buy signal which was a losing trade as well, and then eventually we got the signal, and then off we went, recouping all of the losses and ending the day with a profit. However, in the Dow, if we just move over to actually, let me just show you what's happening on the overnights. You'll see prices there starting to move back to the upside in the DAX as well as the Dow, which we'll see in more detail. So let's have a look at the Dow. This too going through the 200 bar moving average on the daily chart, but also the 20 bar moving average, and trading to the 62% retracement from the all-time high to the low projected back up gives you this 62%. However, let's just draw in some fib retracements on the downside, and you can see you've got this low here before this low. So what I will do is always take the first low, and you'll see there that the market is also showing this cluster just here, where the DAX hasn't reached this, the Dow already has. So in the 5-minute Dow yesterday, the Dow was down 2,000 points yesterday from Monday's high. Again, we see prices attempting to be moved higher, and then apparently or allegedly there is a concern that the coronavirus is on its way back, and this just sent the Dow screaming to the downside. And every time it got anywhere near the 20 bar moving average, prices again were pushed to the downside. And then overnight, as miracles happen in the market most days, we see the plunge protection team doing their work on the overnight and moving the market back over 300 points already. We'll have to watch the 200 MA and also the DP level, which is here. So prices attempting to get through the DP level will need a bit of momentum as well. But be rest assured, if they want to move it back, then I wouldn't be at all surprised to see this after so many times in the past where they've managed to achieve this. Unless, of course, now they've given up hope, having printed trillions and trillions to support the markets and thinking, you know what, it isn't going to work, and they let it go. But we'll find out today, and the price bars will give us that indication as the day unfolds. So what have we got today news-wise that may help? We've got prelim consumer sentiment. That's out at 3 p.m. That's this afternoon. And then 7 a.m. we've got the UK GDP minus 18 is what is forecast. The reality is we're not getting a V-shaped correction. There is no normal anymore. It is now titled the new normal, bizarrely. But yeah, this is where we're at as far as the markets are concerned. Okay, I will leave it at that. The market I'm currently trading is the DAX. The Dow is incredibly volatile at the moment. It is moving 50 points even in 1 minute bars. So the only concern I have is that the spread betting companies start to increase their spreads again like they did in March, which will be an absolute pain in the proverbial if they do. So fingers crossed they keep these today at the levels of 1 point or 2 points on the German DAX. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.